Hello, traders. This is Michael coming to you from GammaEdge on Wednesday, March 19th with our pre-market morning strategy and briefing session. As always, here at GammaEdge, we start with our three pillars: sentiment, structure, and trend. We're currently starting with our market trend model. We continue to see consolidation via the bolded white line, which is our CT, our instantaneous intraday cumulative tick. We are noticing that the moving averages are compressing also. We did move into the colored ribbon, and we were discussing that live multiple times about the possibility for some sort of stalling type consolidation action. Historically, when we see this 1 to 2 day impulse up from a bearish state trying to return to a medium or intraday bullish state, when we start running into the colored ribbon, we do see some sort of consolidation. Most likely. So where do we go from here? So we are obviously watching this intraday to see if we see the CT start emerging above the moving averages again and then emerging out of the colored ribbon. This would lead us to the thesis that most likely we'll see further upside. This may be a shorter term impulse again. 1 to 3 days, or we may see a sustained 5 to 7 days, depending on if we continue the lower left to upper right and start adding on to our tick tag combos, which I encourage everybody to study. The other probability would be a failure. We start moving below the moving averages and then below the red of the colored ribbon, and then we start moving back down and we have a close below the previous day close, and we continue into a bearish state, and we would see more weakness in the overall market. So basically, we're at a turning point or decision point within the overall market trend model on a shorter intermediate term. Longer term is still bearish. We do have one positive slope as the CT is above the bottom. But if we start to emerge out the top, then we will turn that to a TC4 and then eventually a TC3, and we start entering P2P trades, P-trans to PGEX, our mechanical portfolio trades. So again, Wednesday, FOMC day, we have a lot of news coming out, and we're at a decision point within the overall market trend model. So advice is be patient, wait for this resolution to start showing either direction move, and then we can get in motion. If you're already in motion from lower, obviously I'd be looking intently to at least take some profit into this overhead and then hold a portion. You could always add progressive exposure back if we start moving to the upside, or if we conversely have a failure to the downside, you would be exiting those trades that you started entering down here with progressive exposure on day one. So that is our market trend model, and again, we'll be watching that intently for resolution within the next day or so. SPXP, all expiries turned on. We are still put dominated extensively through the overall sentiment and structure. We are well below transition even at the open this morning. So again, noting that significant out of the money put dominance in the left-hand plane. Looking at the GEX ratio, even with the 2-day bounce in the overall market, we did not have a significant improvement. So put gamma continues to rule the overall structure, as well as negative put delta. Noticing that 5,600 is at a very large level, net delta that we've been discussing. It's a technical analysis level. It's a round number. If we get below 5,600, we'll start adding those negative deltas, which are currently out of the money, and adding those negative deltas to the overall book, which would induce most likely some more selling down towards that 5650. And then that's an area where we might see some sort of stalling or reaction, noting that's also a large negative delta level. If we got below 5650, then we'd anticipate some more weakness down towards the bottom of the expected move range. We did see some improvement yesterday in the left-hand plane, but not enough to overcome those out-of-the-money put speculators in the left-hand plane. Right-hand plane just completely put dominated, as we've discussed, to the upside. No fear in these put holders at the moment. If we do start moving to the upside, and at the very least, we'd have to get above 5650 to possibly induce some fear in those in-the-money put holders, and then possibly see some sort of monetization event if we do move above those. Again, this is all expiries though, so this is on out in time. The put holders are well entrenched, and then we see transition above, and then we see the DEX transition really off the chart, so most likely not in play at all for the moment. Out of the money calls, as we just discussed, really can't get any footing or foothold to produce any positive net OI or net delta to the upside. So again, we'll have to see a significant change in the overall structure and sentiment for us to start moving towards the opportunity or chance that we would move up significantly above 5650 and then towards 5700. So again, with the news event today, this can change the overall sentiment and structure significantly. So we'll be watching that. But coming into today, the overall status is we are put dominated, significant overhead. In the money put speculation or in the money put holders will most likely dampen price movement to the upside. SPX P0 DTE. We have two inlays here, as well as the overall web app and structure and sentiment. Again, we are still put dominated. Expected move is still extremely wide, 1.54%, obviously with increased volatility. Noticing the DEX and GEX transition confluence here at 56.15. As of the open, or as of the pre-market here, I was looking, we're roughly just right above that at 56.20, 56.25 hovering. So if we have any chance to move to the upside, we need to at least hold the DEX and GEX transition here, or at the utmost 5600, which has been that round number we've talked about for multiple days. We notice the drunken sailor range outlined here from 56 to 5700. Again, could be extreme choppiness back and forth. We did hit 5700 not yesterday, but previous day, and then saw that stalling and pullback as we anticipated, and then we had a gap down yesterday, conversely at 5650, and then saw the weakness really come back in down towards 5600. So again, noticing these levels, overlays, and confluence of where these transitions are at are really important throughout the day. And then using the vol-am tools to understand what market speculators are doing. And as we cross these, understanding if these are in the money or out of the money, and how that plays in the overall sentiment and structure. So again, crossing above the transition levels at 5650 would give us an opportunity to possibly move up towards 5670 and then 5700 if we did move up. But again, in the money put holders above really entrenched significantly, so it's going to be very difficult to move up. We would have to have a significant vol-am call and put centroid positive slope to the upside, with major out of the money call speculation really starting to come in, and then the in the money put holders begin to close. So we would need a extreme positive slope on the vol-am command to really push us to the upside. Not out of the realm of possibilities, but also understanding we do have low exposure net gex within this whole area. So we could just chop around chop around really till FOMC the afternoon, which is really kind of my thesis. So heading over to the trading view chart. Currently, we're at 56.27 pre-market, so we'll go ahead and expand this. I've done my inlay of my if-thens for today. Again, confluence of DEX and GEX transition, so we're just above that at 56.27. So the first kind of reactionary to the upside that I would be watching for failure or moving through would be 56.50, and this DEX transition right around 56.46 to 56.50. So this is an extreme area that we're watching for some sort of reaction if we do move to the upside. To the downside, obviously transition confluence 56.15. If we get below that, opportunity to move down towards 5600. If we do lose 5600, we've discussed about this extensively, we could add significant negative deltas to the overall structure, which would most likely induce some more weakness in selling and move down towards 55.75. 55.65, and then ultimately 55.10. Not anticipating that as we're heading into FOMC. I believe everybody's probably just waiting for the news events. But post FOMC, if we do start to see some sort of selling, this would be that area that we would watch. Again, to the upside, 56.50, and then we'd move up towards 56.70. If we do get above both of these transitions, 0DT GEX and DEX, which most likely would be the larger hurdles intraday, then we could have the possibility to move up towards 5700, which is the top of the drunken sailor range. Not anticipating us to move above the DS range unless we see a significant vol-am positive call and put centroid, which would mean market speculators are speculating significantly to the upside, and we do see those puts most likely closing. So again, multiple levels to traverse today. Make sure you're understanding the overall levels and how that will influence your trading. Again, trading with smaller size within the DS and higher volatility is basically our our advice and pare down, obviously, as we have news events on the horizon for today. So that's it. Everybody, let's have a great day. I'll be in the Discord in just a few minutes. If anybody needs anything, has any questions, welcome all the new members. We appreciate it. Make sure you're reviewing the SPX game plan, extensive commentary for the day, and then we'll be posting our single stock discussion stuff here in just a little bit. All right, let's make it a great day. Thanks.